Good morning, traders and investors. Welcome to a delayed edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, scrambling here to get the show up and running along with Dennis Dick. Dennis, can you hear me?
I hear you. Lots of squeaking, lots of gremlins here today. We do have charts for you. We couldn't get our visuals up there, so you won't see our mug shots today, but you're not missing much because I haven't slept again because all I do is trade all night. Anyways, Joel, we know we got some gremlins here today. We had an IT guy didn't show up here this morning, so we'll blame him. But let's move on. The show must go on.
Okay. All right. S&P futures trading here. We're trading down 4.25 points. Made a new high of the move yesterday at 2851.75. High close for the move as well. So that will be a target on the upside. On the downside, we haven't quite got to yesterday's intraday low of 34.50. So we will keep an eye on that as a potential target on the downside. Crude oil futures just flat here. They're trading up just a tad. Quiet range yesterday. We'll see how the crude oil futures react today. So, Dennis, I guess let's just get started with earnings, and you're going to have to take away.
I'm going to get started with the S&Ps, Joe. What just happened? Because we just fell 4 handles here, like in the last, just since you started talking. We were trading down only a dime. Now we're down 50 cents. So we were falling out of bed here right now. Not sure if there's a headline here. Again, we're running a skeleton crew here today, guys. So stay with us. Chat, you got to help us out here. We got the skeleton crew going. You guys help us out too. Everybody, all the Benzinga team is up in Toronto at the POT conference.
Yeah, what a coincidence.
So that's why we're running the skeleton crew down here. So we're light on the news. We're light on everything here. So guys in the chat, guys on Twitter, let us know if you see something, because obviously we can't check news as well when we're doing the show live. So we're leaning on you guys here. Chat's going to come through for us today. So anyways, we are falling here hard on the S&Ps here right now, down 60 cents. We just dropped about 6 handles since the show tried to start 5 minutes ago. First of all, let's go to the S&Ps, Joel. What are your thoughts here? I mean, we get a big rally yesterday. It seems like nothing can keep this market down. We obviously get spooked with what's been happening over in China, those stocks getting killed, but our market shrug it off completely yesterday. What are your thoughts here as you look at the S&P chart?
Well, I keep trying to say that we're in the top of the trading range, and then we keep expanding the top of the trading range. So 51.75, that was the bogey that's behind the upside. We're still 30, 40 handles away from that all-time high that's closer up towards 2,900. Once we got close to 2,800 the other day, we got to 2,803. I mean, it was just rejected. The buyers came in full force. What I thought was interesting was the reason for the big pop on Wednesday night. Is that correct? Yes, Wednesday night was because we were going back to the table with China, and then in the middle of the day, we get a tweet that, oh, China's not going to do a deal with us, and the market went down. It just went down a little bit, but overall, good earnings season. We're finding a roof, but we can't really break down to that 2,800. So I'm not sure what just took the S&Ps. I am re-signing into my trade station here. I'm not at my regular station here, so I'm at Spencer's computer. So it's gonna be a little bit different here today for us. But that's it. That's my levels on the S&Ps.
We'll blame the turkeys here on the chat there. Yep. We've got some people talking about, and Chris is talking, thanks Chris, about Turkey here. And if we look at the TUR, it is down 6.3% here this morning. So we had a little relief rally the last couple of days. That quickly giving back here. I mean, we're not even that far from lows, 1888. So we just traded down to 20.5. Actually, we just traded down to 2003. So we're down significantly here in Turkey, and that's probably not helping the cause.
Right. Blame it on Turkey. Blame it on the terrorists. Yeah, we'll blame the Turks for this one. But I think the reports and a lot it's going on with Tesla, I think, is kind of affecting the market as well. So
give us the news here on Tesla here this morning, Joe. We're down another 8 points. I mean, the saga continues here. We've got SEC investigations in there now. We've got, obviously, still is potential for a 20 bid. We don't know what's happening with that, although the risk arbs are saying is not very likely that occurs because they've put almost a 90, well, actually, they've got a 94-point discount on it now. So it's saying that there's very little likelihood the risk arbs are pricing in that's going to occur. But is there any other headlines here?
Yeah, I mean, the Tesla board is concerned about Musk long hours use of Ambien. board searching for an executive to take the pressure off Musk. SEC subpoenaed Tesla parts suppliers last year to determine if the company misled investors. The Model 3. I mean, there's just all kinds of, SEC's coming down on them. And then you get a headline that the Tesla takeover could be funded by SpaceX. You know what? Things really sound like they're falling apart at the seams. I mean, we never got.
It doesn't sound like this for. I mean, when they're pricing it down here, and I, thought that they would be trading in a trading range until we get more, obviously more information on whether this private offer is going to go or not. But it's starting to look more like it's not going to. And that's why people are starting to take profits. And there's other issues here now. There's a credibility issue. Again, you throw, funding secured, or what else is he, so secure about? That isn't as secure as he's acting. So that's, the issue here with now is the credibility issue. And if the 420 comes off the table, I would expect it to fall another 10% on that news. So we'll see, maybe the 420 bid does come through and these people get punished for selling it down here. That's one reason that I'm scared to short the stock, because what if they do get the financing for it? And what if it does get all of a sudden halted like the next day and boom, you got a 420 bid, the thing will trade up to 390 or 400 on that. So there is that outlier chance that that does happen. So that's your risk if you're shorting the stock. They could play through the options, but the option premiums are hefty in there. So that's a difficult play there too. It's tricky. It's a tricky play here because it's trading just on headlines every single day.
And
technical is almost meaningless on this.
Yeah,
there's as much headlines.
Yeah, the options markets. I mean, I looked at it when it was up there, and it was just outrageous premiums for that. We are, it was still 335, 340 was the area where the move kind of emanated from. So you're still below that area. They did not ever get near that 420. And you know what? You got to hand it to the Wall Street shorts. They had some guys in there while, the thing was going on. They're like, no way, this is not going to happen. So the street keeping this in line a little bit. So good thing for the short sellers here. We are now almost $100 off that supposed going private. And it sounds like Musk is, is having some problems here. But hopefully that will get resolved, and we'll see what happens with it actually going private. So
let's go. And we obviously don't have our news team there right now, so I'll throw you under the bus. Get your pro open there, Joel. I'm going to go to JWN here, and we need the earnings report for this. The action last night was just insane. And I mean, we saw an insane move in Walmart where it got up over $100 and starts to leak already here. JWN got over $60 last night on these initial numbers. And I don't know. And, I was talking with one of my buddies at Brighton. We're trying to figure out these crazy moves here in the last few reports. I mean, JWN is a stock that I don't know what it was priced in, but I know typically on a report, it'll move $2 or $3. I mean, you had a move of 8 points. I think it was a 14% at one time. I don't get it. I mean, it was a good report. But holy cow, people just get that excited. I don't know if it's algorithmic driven. My buddy seems to think it's algorithmic driven. But if you look at that after hours chart there from last night, this thing went to over $60. I was actually trying to play from the short side. Again, I mess it up because I'm trying to short it on the way up. You just get so excited when it starts trading 58 and then starts blowing through you at 59 and you're like, yeah. Anyways, I tried to short it a couple of times and it just wasn't working. And, you got to almost wait until it seems like the play is they take out the big hole number, they go up through the big psychological number, and then they come back down through it. And that's the play. And Walmart was the same thing yesterday in the pre-market session. It was trading up over $100 actively. It opened over 100. It went 10 cents higher. As soon as it came back under $100, that's probably the sell signal. And JWN was the same thing last night. Didn't give you much chance. So after it came down through 60, it never really got back up over it. So you could have shorted the 59 area, but you had to be quick. So these big whole psychological numbers come into play when these things get these extreme moves. And I'm going to say, again, I'm going to go on my little tangent here about trading the stock against your options. Because imagine somebody, had calls on this. And they're coming in this morning and sure, they're probably, paid $2 or $3 for those calls that were at the money. So maybe they're up $1 or so. But if you were selling the stock short against those calls up at 59 or 60 last night, you just locked in a lot of money. And not only that, you're making it on the short side too. So you make it on the option and make it on the short. So I'm telling you, if you're a buyer of options and you're always buying, just kind of little lottery tickets and stuff, trade the stock against them. Get in that account and trade it against them because this is how you lock in these excessive gains. You can't wait till the next morning because a lot of times these gains are gone. In Walmart's case, it wasn't. It did give you a quick shot there. But in a lot of cases, these things just end up going right back down. and or giving back a lot of it and going to where the move, where the expected move was. And it's a little bit self-fulfilling. I mean, we got a lot of call buyers there, and I didn't look at the JWN action. I don't know if there was a ton of call buyers, but if you do have a lot in a situation like that, especially in a stock trade like NVIDIA, which we'll get to in a second, those call buyers will obviously be, the professional ones anyways, the market makers, will be selling the stock short against it, and that will bring the stock back in. So it's very hard for these stocks to make these huge extended moves when you get, a lot of option traders out there. So you see it after hours because there's no volume. There's no liquidity out there, so things can just blow through. Because who's setting their order out there and getting picked off in the event that the stock blows earnings away? Like if you're sitting there 52, the stock's 52.28. If you're sitting there with your 53 offer out there, 75 cents higher, that's just a horrible order, because if they miss, it goes down, you don't get executed. If they beat, you get picked off at 53, and the thing's at 56 in your face. So, at a certain point, when the expected move just gets ridiculous and the thing goes up 14%, that's, where you start to think, okay, I need to fade this move. But, flat out shorting is always scary because things can keep going. We've seen moves of 20% on some retailer and some other stocks this earnings season. But, I mean, if you're long the thing and with options, what a great way to lock it in by selling short the stock against your calls.
All right. Wow, that was a nice tangent there. Give me a time to catch my breath. I could just walk and grab some more water during that. Nordstrom, a Q2 beat of 11 cents, 95 versus estimates of 84. Good sales, 3.98 billion versus estimates of 3.96. Raised fiscal year sales, and all good news here. Reported Q2 comps up, 7-point increase in net sales due to change in accounting. I don't know if you really like to hear that, but just going back to yesterday's show, and if anyone is listening today did not get to listen to Ryan Craver yesterday talk about the retail stocks, then you need to hit the rewind button and you need to go listen to that show. He gave just an excellent breakdown of the retail sector. And the one thing that he said about Nordstrom's, and now this is already in the past, the company put like a floor underneath it with the talk. Yeah, that was really good strategic. They're saying, okay, if you're going to treat my stock like this and you're going to treat our company like this, they know the value of the company. We'll take a private $50, and then you can play in our sandbox. So I thought that was excellent comments by him. The spike went to 60.22, so weren't taking much heat if, in fact, you were trying to short at 60. Since coming down off that pre-market high, the bottom's been 55.55, and we're just hanging out here at 57.10. Still up $4.82. Don't think we're going to get back to the pre-market high, but that's how things are looking in JWM, and another good beat here in the retail. I guess retail is not totally dead.
Let's go to NVIDIA, which was the other big report from last night. It did get hit on this report. A lot of people were saying it might get hit, and it did. Expected move, Spinner was saying it was looking around 249 or 250. So really, if you were buying puts, and he's just given the same argument that I just gave, you had to be buying it. So right now, if you're coming in, you bought puts, you're not making any money at 250. But if you were buying the stock last night between 242 and 248 against those puts, you would have been making money. So that's always a consideration. Obviously, you sell, if you're long calls, you can sell the stock short against those calls. If you're long puts, you can buy the stock against those puts. It's the other way to play it. And if you were doing that between 242 and 248, you could have locked in some money. NVIDIA is the one that it's got that underneath demand too. I don't think this is going to be one that's going to go down 20 or 30 or 40 points, because this company is just loved. I mean, there's a lot of good things still going on. Yes, they, didn't have a great quarter here, but, they're saying crypto. I got a kick out of this comment. They said they see going forward crypto zero of their earnings going forward. That's how much they believe in the crypto market. So I saw that on the commentary. Obviously, we can say, everybody's been saying, it's a crypto stock, but crypto is such a small portion of their overall revenue. When you're talking, a company that makes kind of money that NVIDIA does, it's a very small portion. So they saw zero concerns if the crypto market implodes. I don't think that affects NVIDIA whatsoever.
Okay, you have a beat here, 194 versus 166. Sales a slight beat, also 3.12 versus estimates of 311. Maybe spooked a little bit by this Q3 sales guidance, a little bit under guidance. They made the commentary on the chips, and also Dennis, I mean, mean, I'll bring up this stock. I'll just give you the pre-market low. Your pre-market low comes in. That initial reaction took it down to 240.92. And once again, all the people with puts from, 258 or
bought a stock against it.
Yeah.
And it comes back.
Yep.
That's what happens.
Yep.
They let it whoosh, and then they're like, I need to, buy these stocks. And so if you got any, a lot of these put buyers, or if there's people that are doing it, some of them are going to be market makers, some of them are going to be, professional traders. So they're going to be doing that. I mean, that's why the expected moves often work out, to what they do, because there's people who are playing those strategies that will naturally bring it in. It's just a natural trading of the stock. Sometimes things, blow out, and sometimes those flat out puts will work. But it works so much better when you can trade the stock against it.
Since the rebound here, you've found resistance at 251.18. That is a double top based on the 15-minute charts here. So that's your resistance. The dailies, I mean, it had a nice ride yesterday, Dennis. How did that work out for you with your pre-earnings trade? I know did you get out it yesterday, or was it the day before? I know you were playing that for the pre-earnings run up.
No, I was, and I sold it the day before. I was saying on the show, I think I even talked about selling it, the day before on the show, because it got the double upgrade from Wells, from sell to buy. Ooh. And I was looking at that, and it wasn't responding well to it. But what happened was the overall market, it was a risk-off day. So NVIDIA would have been much higher. It would have worked, but you've got to think, you've got to look, yesterday was a different, a whole different scenario altogether, because it was a strong day. It was a weekday for NVIDIA. It was the day before, though, that I wanted to get out. So I was in the stock for the day, for, the pre-earnings run. And then I got, the bonus of, getting that upgrade. So I was up significantly, and the stock was trading 265 after hours. And then it started to come in, and then the market just imploded, completely risk off. So I'm like, well, I got to get out. I actually hedged it with AMD, which worked out well. So I was long NVIDIA, short AMD. This was 2 days ago, and the AMD came in significantly, and the NVIDIA kind of held up a little bit because of the upgrade. So I was able to get out of NVIDIA with just basically a small loss, but I made a good chunk of money on the AMD side of it. So there's different ways. I mean, and this can segue into a question that we had earlier. I can't fill my Facebook. Was actually just wondering about AMD and NVIDIA, and he's asked me in the chat, when you pair trade, do you go with equal capital in each pair, or do you take equal share counts? Typically, you always go, share counts don't matter. You always go, because if you did 1,000 shares of NVIDIA, 1,000 shares of AMD, you're definitely not hedged.
Yep.
So you're always going with capital, but you got to consider betas too. So when I'm doing, full-on pair trading, I'm actually beta hedge. So meaning if the beta of the stock that I'm trading is twice as high as another one, then I'm going to put on only half that amount of the one that's got the twice as high beta. So, I know AMD's beta is significantly higher, although right now you've got an event. So NVIDIA is going to have a little bit of, of movement as well. So there's all those considerations always. You just got to be kind of adjusting on the fly. But I typically, and I wouldn't say I'm a flat out pair trader. I'm a stat herb guy. So I like to do a lot of sympathy. I respect the relationships very much so. And that's why I find this very interesting too. This was another question from my chat, from my Twitter account. Lots of people ask about NVIDIA.
You'll start charging for that, Dennis.
Yeah, Kayla is asking me, do you think NVIDIA stock, as it's trading the pre-market down, will affect AMD negatively? Normally I'd say yes, but you know what? It's holding up well, and a lot of the sympathy plays are holding up fairly well here. I mean, maybe NVIDIA is not down as much as, it's come back here. On the initial spike, AMD got hit, but then it was bouncing back, and I noticed a lot of the semiconductors were actually holding up fairly well. Like Intel's barely down here today. AMD is barely down. So the sympathy here is really not showing up. And it's not a huge move. It's down 2.5%. So it's not like it's down 10%. Everybody's going to be selling every semiconductor out there. But it's, it's interesting when you see AMD almost trading flat, Intel almost trading flat, and NVIDIA, significant or down 2.7%. It's interesting that the sympathy plays aren't working this morning. I mean, the pre-market is the best tell. It's the reason why me and you started the show 5 years ago, Joel, was because we thought pre-market action could really dictate where stocks are going in the regular session. And not enough people watch the pre-market action, watch the highs and lows from the pre-market to really get a feel for it. And that's been my edge for the last 5 years of trading, is I really watch the pre-market action to get a feel for what's happening. So flat out, if I didn't have any knowledge at all, of anything that's happened here after hours of pre-market, I would say, yeah, AMD is probably a short here on these NVIDIA numbers. But the pre-market after hours action is telling you different. It's telling you that it's not really, showing, the stars aren't showing up here. So if they're not showing up here, I don't fight the tape. I'm not going to go in here and say, okay, I think the sellers in the pre-market and the after hours, or the buyers in the pre-market and after hours are all wrong. I'm saying that it doesn't look like there's going to be a sympathy move here this morning.
You know, this,
so you got to use that information, and sometimes you can actually see things go the other way.
I mean, this AMD is really holding in here. I mean, considering that the large move that it's had, negative news on other issues in the sector. I'm just keeping it. We're at 1924 here. We're down 9 cents, and you know how I like my highs or lows in the same area. So 5 of the last 6 lows. Let's just, even going back to August 7th, let's just call 19. 19 is going to be my bogey here. You had a couple lows in that area. We keep bouncing off there. I think until, you take out the 19, you close under 19. I'm tempted to short it, but it just keeps it very
held up.
Yeah, it's held up fairly well here. And and I also just want to report some news here. The DRAM exchange, DRAM E-Exchange
DRAM,
reports, DRAM, I'm good with that stuff. Reports NAND flash market remained in oversupply in Q2. And Dennis, we got to have a talk here about your Micron. Okay, someone's asking about here in the chat.
Everybody asks every day because there's people getting killed in this thing. I don't even look at it. And this is the difference. You've got to be able to separate trading and investing. You've got to be able to separate. And people say, oh, you just made a bad trade come an investment. No, I didn't. I put that on my long-term RSP account. I don't even know if I've ever sold anything out of that account before. So you've got to separate it. So yeah, I've got a position in Micron. Yeah, I'm taking heat on it. Yeah, it was a bad buy. I could have got it a lot cheaper there. But I'll tell you, some of my best things that I hold in my long-term investment portfolio, I took heat on. I took a lot of heat on. It's hard, I bought that from a fundamental thesis. The thing's trading with a multiple of 4. Yes, the multiple is going to go up. Yes, if DRAM goes into supply, it's not going to make as much money as it did, but the company still makes a hell of a lot of money. So am I selling my Micron? No, I didn't buy for a trade. If I was in this for a trade, I'd be long gone. And I trade Micron a lot, but it's in a downtrend. It's going to 45. I mean, I said it yesterday on the show when it was 48. I was like, I think this thing's going to 45. I said I was even talking against my book. I'm probably maybe going to dip out of my toe and a little bit more on the investment side of it, because originally I bought a third position. I bought another third position. At 45, I'll have a full-size position. So I'll probably bring that. I bring my cost basis down to probably 51 or 52. And then I'm not going to look at it again. And some of the best stocks that I've held in there, like, how do you get a MasterCard that you're up 1,000% in?
You got to hold it.
It's by not looking at it. There's no way a trader can hold a stock to be up 1,000% in something. My average cost base on MasterCard, I think, is $12. The stock now is what? 202. So how do you do that? You've got to have separate accounts to separate. There's no way in the world a trader like me is going to be able to hold MasterCard for 10 years in their trading portfolio. It never would happen. I don't even log into my investment account. Sometimes for months, I don't even look at it. Because if I do look at it, I might trade it. So that's the difference, and that's how I've had to do it as a trader. I mean, if you're a long-term investor and that's all you're doing, you don't have to worry about that stuff, because that trading blood won't get you. But, I've got the trader in me wants to trade everything. The trader in me says, sell this. This looks like hell. This is in a downtrend. It's going to 45. Why do you want to own this thing? I think it's going to go to 45 today. I honestly think that, So I think it could bounce there. Maybe it does. Maybe it doesn't. But I have zero worry about this long term, because I think the company, when I look at it 15 years from now, is going to be higher than $45. Do I worry about it if I'm margined and, on a trade on it? Absolutely. I would not want to be in that thing right now. The trend is broken. The $50, DRAM prices are not, or DRAM, being in oversupply does not sound like good news here either, which is why MU is trading down. But you've got to be able to separate. And when I talk on the show, and, we say, oh, I like Micron, I throw in my long-term investment portfolio. Well, if you're following us and you're doing stuff and you're putting it on for a trade at that point in time, that's not what I'm doing. I'm putting it in my long-term investment portfolio. I'm not, and I trade Micron every day. I was actually, it's a stock that I trade all the time. It's active. But those long-term investment shares that I have there, I try not to look at them. That's a difference.
Just going back to when you did that AMD, you laid off the AMD when you were trading the NVIDIA. Were you flat in the NVIDIA at that time? Were you down on it? Because I know you had a little bit of a nice lead on it. Do you remember where you were at on the NVIDIA position? Were you still positive on it, or did it end up?
What are you talking about? Where do we get lost on this tangent?
When you were talking about the NVIDIA AMD spread that you did.
Yeah, well, what was happening was the market got hit, so I wasn't expecting the market. So I'm long NVIDIA. for an earnings trade. I had a hedge on with the Qs. So when I do these, I'm trying to extract alpha. So this is all like statistical arbitrage, right? So if I just flat out buy NVIDIA and I'm saying, oh, I think, and this is a lot where people go wrong. They flat out buy NVIDIA saying it usually runs up 3 days in the report. If the market goes south, what happens? The NVIDIA is going to go down. If it goes into risk off market, it's going to go down. So I was hedged with the Qs. But I didn't hedge it hard enough. I didn't hedge it like the beta hedging would have said, you short twice as much Qs as you do NVIDIA. I didn't do that overnight. So I was already in trouble because when we went to risk off market and all the Chinese stocks started getting murdered, Bob was down 5 points in the morning. It brought down all the tech stocks. This was 2 days ago. And so then I'm scrambling and I'm like, okay, well, I need to work out of this. So I was actually trying to work out of NVIDIA, but it had the upgrade. I didn't really want to sell it. And then for whatever reason, AMD rallied up and almost got to flat. I was like, well, I'll take that all day with NVIDIA with the upgrade and AMD with no news on it. I will take an AMD short against NVIDIA all day. So, and that's why it worked out. So then I shorted AMD against my NVIDIA position. AMD came in. NVIDIA really kind of just held out. It actually, if I would have held it, I would have made money on both sides of it. But I was able to take a small loss in NVIDIA and make money on the AMD side of it. So sometimes you can use pair trades as another way to kind of work out of a losing trade. It's kind of dangerous to do that because you can end up losing on both sides. But it's all just in the art of trading over the years and knowing, like when I'm in trouble in something, how can I make this, how can I work out of this at a better way? And I didn't want to sell a stock that was upgraded. I felt like it was going to eventually catch a little bit of a bid, which NVIDIA did in the morning that day from the Wells Fargo. So I shorted the AMD against it to take the market risk out. That's what I was trying to do, was taking the market risk out.
All right. No, that's good because I was discussing that with you on Skype and I'm like, that's a hard thing to do. You were so convicted in your position. You were trading it. You didn't want to get out of it. I mean, it would have been easy just to take the loss or not as much gain, but that's a rare trait to be able to do that. All right, we just passed the 8:30 hour with the S&P futures trading in the red by nearly 7 points here. 35 even stands as your pre-market low. I mentioned 34.50, and that was the intraday low from yesterday. So we'll be keeping an eye on that. Dennis, what's going on? Anything in imbalances here?
Well, remember, it's option expiration here.
Yes.
So obviously imbalances mean a lot less on this day because you have big institutions that are jockeying their option positions against their stocks. So if we do look this morning, I do see G, small sell balance, 163,000 shares. I see a lot of mixed. I mean, we're down 3 points here. I see some stocks with some small buys, some stocks with some small sells. China's bouncing a little bit here this morning. Spinner with a great point on BIDU. It's getting a little bit more of a bid because Google is apparently not going to be coming to China as fast as everybody thought they were when they were hitting Baidu down 50 points on it. So Baidu's getting a little bit of a pop on that. But Alibaba's getting a lift. I'm noticing a little bit of strength back. I think you had your bounce here. You're getting your bounce here, which we said it was due for a bounce yesterday. We were getting it, and Baba went down to 165. Last 2 days, it's been bouncing. Some of these other smaller ones like SOG that we were watching bounced right off $8. And now it's back up over 9. So some of these smaller China stocks had a nice bounce yesterday. I don't know if I'm chasing these bounces. I think it's more of a dead cat bounce. But actually, if they go up a little bit further, I'd probably try to initiate shorts on them. But I think you have a short-term bottom in place. Now let's see on a retest, which I think we get, do those short-term bottoms hold? And if they do, then maybe you start to take some positioning long.
All right, Rob Hood helping us out here. He wants to get our take on WBA, and that's Walgreens Boots Alliance. Why they ever changed their symbol from WAG, I don't know. Really interesting chart here from my perspective. I mean, we got way down under $60 when Amazon was going to take over the world for prescription drugs.
I know. These things get Amazon and they come back, man. That's one thing I've learned is they stay in the doghouse for a little bit when they get Amazon, but they seem to always come back, don't they? I mean, Best Buy was the first ever thing to get Amazon, and it came all the way back. Costco, Walmart, we're all getting Amazon when Amazon bought Whole Foods. Look at Costco now. Went down to $150, 4 or 5 days later on that Whole Foods purchase or Amazon purchase of Whole Foods. It's now $223. I mean, these just give you great buying opportunities when Amazon, it comes in the space. In some cases, it's obviously going to, if it's more of an impact. But on something like Costco was really, let's stop and think about it. You go to those Costco stores, they're mob scene still. Was Amazon buying Whole Foods really going to put that much hit on Costco? I don't think so. That's the market's spoken.
All right. To me, it's all about the $70 level here in WBA. You've had a great move off 60, but look at 70 here. I just like that. This is kind of what Dennis and I like to look at. It's a psychological whole number. But besides that, look at all this congestion here after you got whacked in February. I think that's when maybe when J.P. Morgan, Berkshire Hathaway were, talking about their, teaming up. But look at all, I mean, 70's in the middle of here, but there's stock. There was stock for sale here at this point, and the low of the move was only 66. Now you go down to under $60 and you come up here. So, man, if something, I just use the top of these of this range, and it looks like it's 70, 71 and a half. Draw a line across there. If you even, if you were looking for more than $70, what I like to do is I like to go a little bit longer term here. And you are nowhere near a 50% retracement. I don't know if that's actually going to happen. You had an all-time high in July of 2015 at 97.30 under 60. Basically got a $40 move. So if you're looking for a 50% retracement of this longer-term move here, 70, 77, 77 to 80. But first got to clear out that $70 hurdle. And let's just take a look at CVS as well if we're talking in the same. What do you think here, Dennis? Time for CVS to play a little bit more of a catch-up here?
You've got the whole thing with Express Scripts, right? So that's been a little bit, obviously another factor that's really moving the price around on that. It's an extended move on CVS. It's a big move for it already. Retailers are hot right now. We talked about the ridiculous move in JWN. I think, CVS has room up to 80. If you look longer term, that's really where the major resistance has been. I feel like you're chasing it here now, though, but I also feel like the overall downtrend that we've had since the stock hit $113 back in 2015 is starting to get broken. So I'm more interested in pullbacks. I think I'd be a buyer of CVS on pullbacks, but I'm not chasing. And again, I'm going to reiterate, in this market, it has not paid to chase price. If you've been chasing price, in some cases it pays, but I feel like 8 out of 10 times the stocks give you a second chance. And here we are, we're up from $63 to $73 in 2.5 weeks. I feel like you're going to get a chance in the 60s on this again. So I'm not chasing it.
Okay. All right. So earnings this morning. And let's see if I can get this right. John Deere. John Deere reported, I got a Q3 adjusted EPS of $2.59. Estimates up at 2.78. Sales are okay. Q3 sales, $10.3 billion. Estimate beats estimate of $9.21 billion. Equipment sales, let's check to see how Deere is trading in the pre-market, and it got whacked here. It's trading down nearly 4% at 132.09, down $5.22. But that's the good news, because this thing traded down to 128 even, and now you're on the rebound trail here. I mean, tariff overhang in this stock, Dennis.
Yeah, there's a lot going on here. I mean, this stock's been out of favor here. A lot of these stocks just got really overextended too. Like, let's really put it in perspective. Since Trump came into power, and when would that have been? Just looking.
16. Yeah,
so you can look here. Really, we were $87. So the stock doubled in a year and a half. So really putting it in perspective, did Deere deserve to double, go from basically $80 to $160 in 2 years? Probably not. So it probably was just a matter of the stock price, which is overextended. And it's in a natural correction mode here now. It's trying to correct maybe more to where value is. So I look at it at 132 and you start to think, well, it starts to get reasonable here. But then when you go a little bit longer and you look, you're like, well, Deere, hung out between 2012 and 2017 for 5 years between 60 and 100. So you think, well, I'll give back 50% of that move. It brings you into 130. I guess you're getting to a point where it starts to get a little more interesting as a value investor, but definitely not in favor here right now. So maybe you want to wait till you get a double bottom, or wait till you get something more to lean on here, as opposed to stocks that are making new lows.
I mean, you've taken out some major monthly support here, and that support was in the lower 132 handle. That's where you're actually that's where you're trading at right now. I think it got overdone in the pre-market. A lot of times, keys that I look for at stocks like this, when they have an extended move, off earnings, see what the low is that day, and I I don't think we're going to get down to 128 even, whatnot. But, whatever the low is today, see the next day, the following day, does it hold that area? Same, I'll be looking at Walmart today. Walmart trading down 39 cents at 98 and a quarter. I mean, 100. That was just hawked all the day yesterday. Now I think, now what you're going to have, sellers going to come down. Like I missed 100. I should have sold 100 yesterday, but I don't want to sell 98. I'm going to stack my orders at 99 now. And I think that's what you're going to happen. Don't know if you're going to come down and fill the gap or not, but Jeremy Newsom, I don't know if you're listening today, Jeremy. He sent out a chart yesterday, and he thinks this is going all-time highs. He thinks this is
Walmart.
Yep. Walmart. Yep.
It's not that far away.
And he said in his the note that he sent out, or I think it was a tweet, that if this doesn't get over 108 by the end of the year, he's going to go to Walmart and he's going to pick a random person and buy their groceries.
Jeremy's always interesting.
I think I owe him, I don't know if I owe him a lunch or a steak dinner on that Netflix 400 call. And boy, oh boy, do you want to talk about Netflix here?
We need to stop, though. It's 8:42 here, Joel. And Spinner, thanks, Spinner, because we forgot about Christian.
I canceled Christian.
Oh, because of the hiccups.
Yeah, unless, I don't know, you want to try and
try to call. Well, I don't know. Is he going to be ready here now? I love talking to Christian,
right.
So he's
Let's
great to talk with.
All right.
We've got hiccups here with our obviously no video here on actually our faces and stuff, and we'll see if Joel can do it. So maybe
I got Chris.
He's there. He says let's do it. He's in the chat.
Okay.
Try to give him a call. See if he's there.
Okay. All right. Hold on.
We're gonna try here, Joel. Well, obviously, we usually have an IT guy when Spencer's away, and our IT guy's not there this morning, so that is why we're having a few difficulties here today. But let's try to get Christian.
Okay. All right, Dennis, you keep talking here while
I'll keep talking. I'll keep the show must go on. I'll keep talking while Joel actively tries to get Christian.
Do you think I should post this show, Dennis, or do you think I should?
I don't even know if we should. This is
leave this one off YouTube.
So, Christian, it's not usually this bad, but when you don't have your regular guy running the show, and then your IT guy doesn't show up, and you're trying to figure out how to do it, it makes it pretty interesting. Anyways, he says he's eating avocado toast. Hold on. Well, it's not video, Christian. We don't have to see.
Yeah, I told him we weren't going to do video. Control F here. We're going to find him. We are looking in our doc here, our amazing doc here of guests that we've had on the show. And we are still pulling it up. Let me see if
so he's pulling it up. I'll talk Applied Materials while he's getting Christian on here, because Applied Materials is another one that reported last night, which we didn't get to yet. It is down 3.7% here in the pre-market. It's trying to cling to support. A lot of support down there between 44.5 and 45.5 here, and it's trying to bounce out of that area. And you know what? I could argue, the bounce trade. This 45 was huge. I mean, this year, this has been like a rock of Gibraltar, this level. 45.13 he got back down to in February. You breached at 44.57, 44.74, but call that whole area 44.5 to 45. There's been buyers there before. Are they going to be there again today? I think so. Starts to take it out, starts going 44, I'm wrong. But if you're planning for a bounce trade to give yourself some room, I can't argue with the unapplied materials.
All right. I am still trying to find are we dialing here?
Hey there.
He's here.
Yeah. Hey there.
We got him. Christian, what's going on? I think we got you. Let us know, chat, if you can hear Christian live here in the chat, because, again, we got some few gremlins here today. But how's it going? How's that avocado toast?
I was not eating avocado toast, but I was eating breakfast. So I'm like, hey, we're going to bring him on. I'm like, oh, geez, let me drink some coffee really quick.
Wake yourself up here. We're putting you to sleep with all this talk on
Christian,
on the video and also the tangents we've went on here. So what are you trading here this morning? What are you looking at, Christian?
Yeah, and I just wanted to kind of second what you guys have been talking about the last couple of days, and it's really strategy, I think, is such a big deal right now. What you've been advocating is completely what I agree with. Is you just cannot chase in this market, and it's almost like going into any day, you have to kind of have a little bit of a cheat sheet in front of you to say, because for instance, yesterday morning, you had a bunch of different things you kind of rotating into and some new names participating that haven't in a couple weeks. So, you get excited. You see Boeing moving up. You're seeing some of the industrials finally catch a little bit, on the on the hopes of a trade meeting. I guess you can't even say trade deal, but I guess trade meeting. So you get a whole nother group participating, and I'm kind of like, oh, geez, I want to get into this industrial group, and I want to, kind of look at Boeing. And so a couple of things I'm looking at today, but you just have to kind of sit and be patient, and you cannot go into these early green days and think that it's going to work out. You got to sit and wait for a red day, and put together that watch list, and then just jump once you see like a big red day and say, hey, these things are now attractive. But yeah, chasing is just the last couple months, I would say. You get hit over the bat when you chase.
Yeah. It's such a hard thing to do though, like pull the trigger when everybody is selling there. Like, how do you first, approach that, and how do you manage the risk when you're buying something like Alibaba yesterday or 2 days ago when it's going straight down?
Yeah, it's a good point, because every time we get one of these red days, it's like the sky is falling, right? It's like, oh my God, and I think that's the part of the reason too why the market just keeps going up, is because you just never have that euphoria of, hey, this is great. Everybody's buying stocks. Like, as soon as you get a red day, it's like, oh my God, we're going, it's going to be the end of the world. So it provides a little bit of an edge. The China thing, what I wait for, and that's, what concerns me the most, not the Turkey stuff, which is what the media wants to focus on every day. I think it's very odd that they keep, putting, I think, the other day when we had the red day, you walk in and CNBC is talking about, not to badmouth them, but they're talking about Turkey. And it's like, guys, Turkey's up this morning. What do you have to have a little bit of perspective. So I am worried a bit about, China slowing down a little bit. For the BABA names, it's interesting because there was some really nice positioning going out, all the way out to June of next year, so you kind of have to, that's why I use a little bit of institutional flow just to see how people are positioning, especially when you've had a big pullback. So, I think some of that stuff for a trade when it gets a little bit oversold, if you're looking for a bounce, but I think overall, like for, a swing trade or for even an investment, you got to see, for me, I have to see the local markets stabilize a little bit. I don't want to buy the Chinese internets if all the major indices over there are continuing to go down. It just isn't going to happen. They're not going to have a sustained move to the upside or recovery unless really the Hang Seng and the Shanghai start to kind of at least stop going down. I think they were down 4 out of 5 days this week. So to me, that's not a market that I really, I have no problem taking a flyer. And I think I did that in a couple things this week.
What stocks?
Some of which works. I actually did the whole ETF. I did the K-Web ETF. I just thought that, I didn't know what JD.
What's in that, like BABA and everything?
Yeah, it's everything. It's all the names that you guys are familiar with. 10 cents in there as well. BABA, Baidu. JD's in there, go up and down the list. Wuba, by the way, had a nice quarter yesterday. I think that kind of got lost because everybody was looking at JD. But I think for those names, it's kind of like, if you're looking at the overall market, right, just like you do in the U.S., right, are you going to buy, for sustained buys, are you going to pick through the NASDAQ names when the whole queues are going down, and have been going down, So that's the mentality that I kind of have with the Chinese internet. I've been trading them for a couple of years, especially in 2017. I would really watch to see what the overnight markets were doing. And if they were up, if China was up big, then I would say, hey, these, the internets are going to have a follow through. But if they're down every day, I kind of want to stay away for a little while and let
Christian,
the dust settle.
let me hop in here. Hey, Christian Fromhertz from Tribeca Trade Group joining us here, thankfully, on Benzinga's PreMarket Prep Show. Christian, really appreciate it. Question coming here out of the chat from Ed Seeking Missile. And this is, we could talk individual stocks, but, let's talk about, being tactical. And he says, how do you buy, on these old red days? When do you do it? Do you do it late in the day, when you think everyone is just, bailing out of positions? Do you try and maneuver in the aftermarket on a red day, early pre-market the next day? How do you position that? When do you like to go?
Yeah, sure.
Go ahead. Take that question from us.
Yeah, it's a great question. So what I've been doing, I'll give you an example of what I did the other day on the red day, right? So I thought a lot of so I guess it was Wednesday when we were down decently. I thought a lot of that was not because of things that were going on in the U.S. And you still kind of have to feel that the U.S. is strong, which I do. If you look at some of the recent statistics that have come out, the small business optimism index is at an all-time, or close to an all-time high. I mean, really, really strong. Retail sales were strong. We're seeing good earnings beats. So I am still a long-term bull until these data points start to miss. Then I would get a little bit more cautious. But I think the U.S., the data points that are coming out are great. So that's why I will kind of continue to buy the dip. And what I bought on Wednesday wasn't anything really sexy. I bought IWM and I bought the Qs. And what I did on a couple, and I legged in. So I didn't, I kind of bought some on the dip. I didn't get the absolute bottom. It's really tough to get the actual bottom, but I just thought that we had a chance to bounce the next day. So I started doing that. I started buying. I think I bought IWM 3 separate occasions that day. Probably once around 11, maybe a little bit more around 12:30. And then I added right at the end of the day because we didn't really get a significant bounce in IWM. But that's been the shelter. That's been the one where I think if you think that it's really overseas pressure and has nothing to really do with the U.S., then small caps should continue to be the place to go to when there's weakness.
Christian, let's talk.
And I bought a little bit of NASDAQ too.
Okay, let's stay on this subject here. Time frames. As far as charts, and I mean, I really try not to go any shorter than a 15-minute time frame. Point and figure charts, tick charts, they just make me nervous looking at them. I like to go 15, and the way I have things on my trade station, I got the 15-minute, the daily, the weekly, and the monthly, all linked up together, not on my setup today, obviously. So when I click on a stock, I can get, immediately those 4 different time frames. What's the shortest you go? And just, if we were taking a look at your setup here, what would we see as far as charts?
Yeah, I mean, I'll kind of step back on starting from like the weekend and when I'm doing research, I'll step back and look at the weekly just to see, the overall trend. But mainly what I primarily focus on is the daily chart.
Okay.
That just kind of helps me see the overall trend. I'll also look at for the major indices because I like to look at the overall view and then dig into individual names because I think you guys have just been hitting the nail on the head with it's a stock picker's market. So you want to see the overall view, but I'll look at the 1-hour charts too just to see if there's any major support resistance level. And I think S&P had a tough time. So for example, if you look on which I know I can't share a chart, but really the 1-hour charts will give me a good sense. So the level that I was looking at yesterday and where I thought we might run into issues was basically this level here right now, 2840 in S&P futures.
Yeah, that's just going to ask you.
Monday.
Yeah, you know what? I just want to ask you about that because I am torn. This is our final question, and we'll let you go. I mean, are we just at the top of the – I mean, everyone that comes on the show is like, we just got to go to new all-time highs. I mean, it's just a foregone conclusion that everyone thinks we're going to all-time highs. I think we're still in the trading range, and we could be in a trading range for a year or two. What's going to be the driver here to take us to new all-time? I mean, I want to see it. I want to see it for the majority of my portfolios, but I'm just not convinced here. What would convince you that is it that 2840 level, 2850, yesterday's high? What are you looking at for confirmation we're going to new all-time highs?
Yeah, and to tell you the truth, I'm not really concerned with the overall, with the overall S&P index. So I look at VTI, which is it really depends what area you're going to focus on your trading. I'm not really an S&P futures trader. I don't really trade S&P for alpha. So I concentrate on just momentum and things that are making new highs. So for me, the overall market, I honestly don't need it to hit a new high or for us to I don't need to worry about it day to day whether or not it's going to continue to make those 52-week highs. If I'm tracking the right stocks and the right sectors, there's plenty of sectors that are making 52-week highs and plenty of names that are making 52-week highs. So I don't have to get bogged down and wondering and really thinking about it and getting caught up. Oh my God, is the S&P going to go to a 52-week high? Well, I don't trade a lot of names that are in, you got to remember, there's a lot of cross currents in that index. You've got utilities in there, consumer staples, you've got tech, banks, which, the banks I'm not really big bullish on, and they're a decent component of the S&P. So you just, and that's the beauty of a retail trader that, people don't emphasize. An institutional trader kind of has to stick to a plan and maybe their mandate, but as a retail trader, you could do whatever you want. You don't think the financials are going to move up? Don't go in the financials. Don't worry about them. So, we have a lot of flexibility and a lot of really good things that you could do as a retail trader. If you want to sit on the sidelines for a little while, you sit on the sidelines. You don't have to deploy your cash, and you can wait for better opportunities.
Dennis, did you have one more thing?
I just want to expand. That's a great point you're making, and I think one of my biggest edges is, and people have always asked me for a lot of years is why don't you start a hedge fund or why don't you start doing stuff like that? But a lot of my edges is because I'm a little bit smaller. I don't have to deploy. I'm not managing $1 billion. I don't have to deploy huge amounts of capital in every trade. I can wiggle in and out a little more easily, and it allows me to take advantage of a little market inefficiencies. So weaving in and out of the big fish. And if you're obviously if you're a hedge fund, you got to be fully invested or doing something all the time because you got investors to answer to. So it's a great point you're making by being a retail trader, being even a smaller trader. Not necessarily that all retail traders are small, but just saying a lot of them are. It gives you a big edge over the big guys because you can get in and out without much price impact. You can move in and out of this stuff. And if your opinions change, you can get out on a dime. I mean, if you're Fidelity and your opinion changes, it could take you 2 or 3 days to get repositioned. And by that time, your opinion might change again. So being, a retail trader does have its advantages.
Okay. Christian Fromhertz of the Tribeca Trade Group. Thankfully, coming in here with the save. We're going to have to send
We're going to bring Christian back.
Yeah, we will. Thanks so much,
Christian. Him in late. And our show is only got 2 minutes left, so we got to let you go, Christian. But great stuff. We're going to get you back on here soon.
Thanks, guys. Good to be on, and I love the flute playing that you guys had in the opening segment. It's great.
Yes, that's one of my musical talents, as well as
plays the flute
as well as being a great athlete and a market genius. I also play the flute. All right, thank you.
Take care, guys. Have a good day.
All right, Dennis, we're getting in the YouTube chat and in the regular chat. Everyone wants to talk about Netflix here. And boy, oh boy, cleared out 400, traded down to pre-market, has a double bottom at 321. That's where we're going to be opening into here. What's going to stop this Netflix slide?
It's 100 points off the highs now. So you got a little double bottom from 321. 321's big, actually, because that was the low 2 days ago.
Yep.
Got down to 321, 320, or 28 just yesterday, or 321, 3. That's a hard number to say. 321.21. And now you're at 321 again here. So it seems like it's the number here, at least, in the short term for the short term traders there. Let's see if what it does is take out 320. I mean, you round it up, $300 stock, lean on 320. If you're saying this is going to be the bottom, it could happen. I mean, it could bounce here as a triple bottom, could be put in place. But the trend's not your friend here. So, it is down, it is broken. Valuation is obviously always been an issue for me, but just the chart doesn't look as pretty as it once upon a time did. That being said, and I've given this argument before, is that every new ETF that launches, seems like half of them own Netflix or half of them want to own Netflix. So there's always going to be, it seems like, as long as the story stays good and still got a good story, there's always going to be more demand coming in as new ETFs launch. And I think that's what gives, all these stocks, when you see Netflix pull off 100 points, I wouldn't be surprised if the stock eventually, when I look at it 6 months from later, if it has a lot of those losses back just because you have that underneath demand. Valuation still makes no sense to me. I don't have it in my invest portfolio. I don't intend on putting it in there just because it's too expensive. I'm a value guy in my investment stuff. As a trade, though, I'm interested. So I'm interested here, but the trend is still not your friend. I need to see like a green candle. I need to see something to really get it going. If I'm going to play for a bounce off this 320, maybe I'll try it, but I give a very short leash. So if I was to buy this for a bounce trade in the 320, 321 area, I might give it down to 318. I'd give it maybe 1% tops. If it starts to go through that, then you start thinking it's going to test 300. And as it gets closer, when stocks go from 400 to 310, they almost always go to 300. So, there's always that magnet it becomes. So as you get down into the 310s, you start to think, well, we're probably going to 300. So, that's, just different statistical edges that you got to take advantage of and understanding that. But it is option expiration. It is, the potential for some wild moves here at the open and at the close on these types of days. So I can't argue with the formation here at 321. There seems to be a buyer. Let's see if it can hold. If it can't, yep. I think you're in trouble.
Yeah, and you also had some lows in this area back in the middle of May, and then after that, I mean, my next target on the downside, if you cut through this 320 area, you had a bunch of lows just above 300, 300 to the 305 area, 305.73 and stuff. But one has to question whether or not the all-time high may be in here in Netflix. And the only reason I'm saying that is you're over 100 points off the high. The next rally up, okay, when you had this rally, who was selling? Nobody, because it had never traded here. Now the people that bought it, after that last
the original, when it originally went up there.
There was nothing there. The market has no memory. Well, you know what? When Netflix, if and when it rallies again, it's going to have a hell of a lot of memory. Because all these people, you had to
underwater.
Off earnings, consolidation. Okay, 360 is the bottom. Boom. Okay, 335 is the bottom. Okay, boom. So all these people that are in positions, and then also I always give the rant. I mean, long-term investors that have been in this. Let me go to the monthly chart here.
Oh, they have so much money.
Yeah, look how much money. If you
T-Mac's giving a good point. It's still up 67% this year. So if you think you're buying it on the cheap, you're not. You're not buying it on the cheap at 320. Could it bounce and could the ETF flow can drive it back up there again? It could, but you're definitely not buying it on the cheap, not from a valuation perspective, not even from a technical perspective, because this thing, just going back 2 years ago was $100. It's 320. So, I mean, it's been an incredible mover and been an incredible stock. Right now, though, the chart does not look that great.
All right. One more, Goldman Sachs. I know I'm keeping you over here, Dennis. This is definitely the last one of the day. Goldman Sachs, monthly chart. It's swing trade. I'm leaning on this 220 bottom here, 219.12 was your low from the last month. I mean, I think another thing is, you got to be encouraged that Mr. Buffett is in this stock. Really, I think really to get it out of the woods here. Over 240, you got a big breakout. You could do somewhat of a retracement. If it ever did get back down to the 220 area, how much are interest rates going up this year? We've kind of gotten away from that, from the turkey that was, with going on other situations with earnings, but you're going to need to continue rising in interest rates here on this Goldman Sachs. Not in my long-term portfolio yet, but if it's good enough for Warren, maybe good enough for me.
I mean, there's a point there. I think there is some value here in a stock like Goldman Sachs. Obviously, Bright Trading, our primary broker is GS, so I often limit my comments just because I do have a working relationship with a lot of the guys over at Goldman. Great guys. Again, looking at it just from a technical perspective, it's kind of in the middle. When we were 220 at the lows, we got up to, that formed a hard bottom. We got up to 240, which formed major resistance over the last month and a half. Now you had 231, 232, kind of in the middle. So, it's still to be determined here. We had a nice run in the banks there. Are we out of the woods? Is Europe out of the woods? That's the question. Is Turkey out of the woods? Because all those issues could come to roost here on stocks like the banks. So I think the banks are showing obviously weakness here because of Turkey, because we're seeing weakness in the European banks. We don't know if there's going to be a contagion effect. I don't think so, but some of the market does, and that's why you've seen some weakness here recently in the banks. So Turkey is going to drive that in the short term.
All right, S&P futures just hanging in here, down 6 points here. My target on the downside, yesterday's intraday low 34.50, current low 35. That's the key to more downside. On the upside, you want to look at that close now. That was the high close of the move at 44.75. That will pose as resistance. Yesterday's high, the recent high of the move, 51.75. I just want to thank everyone in the chat here for helping us out, being patient with us today as we work through our gremlins. And a big shout out to Christian Fromhertz if he's still listening, because I said I'm bringing you on last night, and then when things were going well, I emailed him and said, I can't have you on today. And then he comes in the chat. So a big thank you to him for his contributions to the show. And that's it. We'll be back with you guys with Spencer on Monday. Have a great weekend.